Let me tell you a secret. Netflix isn't just about streaming your favorite shows anymore. If you're still thinking of Netflix as just a place to binge watch, you're missing out on the real story behind one of the world's most innovative companies. Netflix started as a DVD rental business, mailing movies to your doorstep, but fast forward to today, and it's now a global media giant reshaping how we watch, interact with, and even think about entertainment. And here's where it gets even more interesting. Netflix has quietly been setting up an entirely new phase of growth that could change the game yet again. We're talking about everything from blockbuster original content to sophisticated data algorithms, a brand new ad-supported tier, and even rumors of a potential stock split. Each of these moves isn't just about staying competitive, it's about redefining what a streaming service can do and how it makes money. This video isn't just for Netflix fans or investors, it's for anyone who wants to understand how a company can keep innovating in a crowded market and push boundaries year after year. So, if you're ready to see what Netflix's future holds and why it's still leading the charge in the entertainment world, stick around. And don't forget, subscribe to our channel for more insights into the companies shaping our world. Now, let's break down the real Netflix story. Netflix's journey from DVD rentals to streaming giant. When Netflix first started in 1997, it was a straightforward DVD rental service that changed the game by mailing DVDs to subscribers. This simple idea solved a huge problem for movie lovers who no longer had to visit stores to rent a movie. People loved the convenience, and as technology improved, so did Netflix's vision. By 2007, Netflix made a massive leap into streaming, marking the start of its evolution into what we know today. They didn't just keep up with tech trends, they set them. Their model adapted to new technology seamlessly, showing a willingness to disrupt their own business, a rare trait in big corporations. Unlike other companies that were hesitant to abandon traditional formats, Netflix leaned into the future of digital media. By the early 2010s, Netflix was going beyond renting or streaming licensed content. It began investing in original content with House of Cards, which was a turning point. That decision paid off, positioning Netflix as more than just a platform, but as a legitimate content creator. Over the years, this has transformed Netflix from being a mere distributor of movies and shows to a studio powerhouse. It has disrupted traditional Hollywood and changed how we consume entertainment altogether. Today, Netflix's subscriber count sits at an astounding 247 million globally, with a vast content library created specifically for its users. That's no accident. It's part of a master plan that we'll break down further. But it all starts with Netflix's business model, which offers a steady revenue stream through subscriptions, giving it an edge in the ever-evolving world of entertainment. Netflix's winning formula: more than just streaming. On the surface, Netflix's business model seems simple. You pay a monthly fee, and you get unlimited access to a library of shows and movies. But this isn't just any subscription service. What makes Netflix different, and what gives it a lasting advantage, is the multifaceted approach that powers its business. One major part of this is their subscription-based revenue model, which has some serious advantages. With subscriptions, Netflix gets a steady, predictable income every month, even if every user isn't actively watching. This recurring revenue model allows Netflix to reinvest in new content without worrying about the constant ups and downs that other types of media companies face. In 2024, Netflix brought in over $9 billion in the second quarter alone. That's the kind of cash flow most businesses only dream about. Now, what's the key aspect of Netflix's business model is scalability. Once they've made a show, it's available to millions of people around the world with virtually no extra cost. This is huge in terms of efficiency. Take Disney, for example. Between theme parks, movie releases, and merchandise, their operations are costly and complex. Netflix, on the other hand, doesn't need to worry about physical infrastructure or large overheads. They're purely digital, which means they can keep expanding while maintaining healthy profit margins. What really sets Netflix apart? Now you might think, every streaming service makes content, so what's the big deal? Well, Netflix has a few unique tricks up its sleeve. Let's break it down. 1. Original content as the secret sauce, building cultural phenomena. When Netflix moved into original content, it wasn't just to fill its library. It was a strategy to own the rights to shows that could draw subscribers for years. The success of series like Stranger Things, Squid Game, and The Crown proves that this was a brilliant move. These shows didn't just entertain. They became part of global culture, sparking conversations and even merchandise sales. The idea here is simple. People will subscribe to Netflix if they can only watch these popular shows on its platform. In 2023 alone, Netflix spent around $17 billion on content creation. This approach gives Netflix complete control over its media and allows it to localize content to fit various markets, like with Korean dramas or Spanish-language hits. The content strategy isn't just about churning out more shows, it's about making shows that people can't stop talking about. This drives word-of-mouth marketing, which is a powerful way to draw in new subscribers without spending a dime on ads. The recent popularity of shows like Wednesday and Money Heist only highlights Netflix's ability to tap into cultural trends and create programming that resonates worldwide. Having its library also allows Netflix to scale effortlessly. Once a show is created, there are minimal costs associated with distributing it to millions of users globally. This scalability has enabled Netflix to keep profit margins healthy while investing more in high-quality productions. Not many companies can replicate this, which keeps Netflix a step ahead of the competition. Data-driven decision-making. Knowing what you want before you do. Netflix's secret weapon is its recommendation algorithm, which keeps users hooked by suggesting content tailored to individual tastes. Every interaction you have with Netflix, from what you watch to how long you watch it, feeds into a complex data machine that learns your preferences. This doesn't just help Netflix predict what shows will work, it also keeps viewers engaged by presenting content they'll likely enjoy. For example, if you're a fan of horror, Netflix's algorithm will likely suggest shows like Stranger Things or The Haunting of Hill House. This personalization keeps users on the platform longer and reduces churn, the rate at which people unsubscribe. This data isn't just used for recommendations, it's also a tool for content creation. Netflix has reportedly used viewer data to shape storylines, predict which actors will resonate with viewers, and even decide how long episodes should be. It's a level of precision that traditional networks simply don't have. By leveraging data, Netflix not only minimizes the risk of launching a flop, but also ensures that its new releases align closely with viewer expectations, increasing the chances of producing a hit. This approach to data-driven decision-making gives Netflix an edge over competitors who may not have access to the same level of insight. Companies like Disney or HBO might know their viewers well, but Netflix knows its users intimately, an advantage that has kept it ahead in the streaming game. The global reach advantage, producing content for every market. Netflix's global strategy is another reason it's more than just a streaming service. The platform is available in over 190 countries, giving it a massive, diverse audience. But what's interesting is how Netflix tailors content to these audiences. Unlike many of its competitors who focus heavily on English-language content, Netflix has invested heavily in producing shows and movies in other languages. Squid Game from South Korea and Money Heist from Spain are prime examples of this approach. Both shows were local productions that ended up becoming global hits. This localized content strategy not only expands Netflix's audience, but also strengthens its presence in international markets. When people see their culture represented on screen, they're more likely to feel connected to the platform, increasing loyalty. Plus, these shows often cross borders, capturing audiences who would have never considered watching foreign language shows before. This globalization of content is a unique strength for Netflix and sets it apart from services like Hulu, which have a more limited international footprint. Moreover, Netflix's strategy also helps it spread production costs across a larger subscriber base. While producing original content can be expensive, Netflix's global reach means that these costs are distributed across millions of users worldwide, keeping the business profitable. Expanding revenue streams. The power of advertising. Netflix has been traditionally ad-free, but in 2023, it took a surprising turn by introducing an ad-supported tier, priced at $6.99 per month. This new subscription option offers Netflix access to a whole new demographic, those who may not have subscribed at the regular price. The ad-supported tier isn't just about adding more subscribers, it opens up a massive revenue stream through digital advertising. Netflix is now tapping into the $567 billion global digital ad market, which could make up over 10% of its revenue by 2027. For Netflix, the challenge is to keep ads from becoming intrusive, so it's working to strike a balance that keeps viewers happy. If it can pull this off, the ad-supported tier will be a major growth driver. Netflix is already seeing increased subscriber growth in price-sensitive markets and among younger viewers who are accustomed to ads on platforms like YouTube. The extra revenue from advertising gives Netflix a buffer against subscriber churn, making it more financially resilient in the long run. This move shows that Netflix isn't afraid to break from tradition if it means tapping into new revenue streams. It also signals a broader shift in the streaming industry, where other platforms may eventually follow Netflix's lead and introduce ad-supported models of their own. Netflix's financial power still going strong. Now, how is Netflix doing financially? In one word, fantastic. In the second quarter of 2024, Netflix reported revenues of $9.55 billion. That's up from $9.3 billion the previous year. Even more impressive, their annual profits jumped from $1.86 billion in 2019 to over $5.4 billion in 2023. Netflix's profitability keeps rising because they've become very good at managing their costs. Their gross margin, or the percentage of money they keep after paying for content, reached 43.8% in 2024. That's a solid recovery from 2022, when competition was hitting hard. What about return on equity, or ROE? Netflix's ROE is higher than Disney's and Spotify's because they don't have as many costly businesses to run, like theme parks and music royalties. They're laser-focused on content, keeping their expenses lower and maximizing profitability. Disney Plus is still in the growth stage, and Spotify pays a lot in music royalties, so Netflix's model is currently more profitable. But there's one area Netflix needs to watch: engagement. Engagement challenges. Netflix has added more than 39 million new subscribers in the past year, thanks in part to its password-sharing crackdown and the introduction of the ad-supported tier. But while subscriptions are up, the total hours watched haven't increased much. Netflix reported that subscribers watched a total of 94 billion hours in the first half of 2024, only a 1% increase from 2023, and the average daily hours watched per subscriber actually dropped from 2.1 to 1.9 hours. This trend might seem concerning, but Netflix isn't sweating it. With such a massive subscriber base, even small increases in engagement can lead to big revenue gains. Netflix's strategy? Find ways to monetize existing subscribers better, especially in high-revenue regions like the US and Canada, where average revenue per user rose from $16 to $17.17. In other words, Netflix isn't just focused on growing subscriber numbers, but on maximizing revenue from each subscriber. The rumor of a stock split. One of the latest rumors is a potential stock split. Right now, Netflix's stock trades above $700 per share, which is high for many individual investors. A stock split would make each share cheaper and more accessible, especially for smaller retail investors. So, what's a stock split? Imagine you have one share worth $700. In a 4-for-1 split, that one share would become 4 shares worth $175 each. The total value of the company doesn't change, but the price per share goes down, making it easier for more people to invest. Netflix hasn't split its stock since 2015, and with prices this high, now might be the perfect time. If Netflix announces a stock split, it could attract a new wave of investors and even give the stock price a boost. With their next earnings report coming up, this could be the ideal time for such an announcement. What's next for Netflix? Looking forward, Netflix is in a prime position. Their strong content strategy, global expansion, and move into advertising show they're always thinking ahead. They're focused on maximizing their revenue per subscriber, and even small improvements here can lead to big gains, given their massive user base. Netflix's journey from a DVD rental company to a global entertainment powerhouse shows how they adapt, innovate, and continue to thrive in a crowded market. Whether it's by launching new shows, tapping into the ad market, or potentially making shares more accessible with a stock split, Netflix is showing no signs of slowing down. So, there you have it. Netflix is so much more than just a streaming platform. From revolutionizing how we consume content to mastering data-driven decisions and introducing new revenue streams like ads, Netflix has set the gold standard in digital entertainment. Its approach to global expansion, original content, and data utilization shows just how strategic a company can be when it's willing to adapt and take risks. And as Netflix continues evolving, it's clear the company's vision extends well beyond streaming TV shows and movies. They're building a lasting entertainment ecosystem designed to keep audiences coming back. Now, if you're excited to see where Netflix goes next, or want more breakdowns of your favorite companies and investment insights, make sure to subscribe to our channel. With so many big changes in media, tech, and finance, you don't want to miss out on understanding these shifts. Thanks for watching, and we'll catch you in the next video.